Hey guys, welcome back to Mikey's DeFi portfolio. Today we'll be going over METF, the first ever decentralized traded fund on the Cronos chain. Before we jump in the video, be sure to subscribe and hit the bell notification so you guys are updated every time I upload a new video. Today we're going over the Meerkat ETF. This might look like a typical rebasing DAO, however the devs say that it's not, and there is a number of changes that they have implemented to separate themselves from these rebasing DAOs. Let's have a read over their documents to see how they separate themselves and become a new sort of protocol. So what is a Mad Meerkat ETF? Mad Meerkat ETF is the first ever decentralized ETF protocol that runs on the METF token. The decentralized traded fund term is thus coined to our team as a DEX traded fund, being the first of its kind. Each METF token is backed by a basket of assets within the ecosystem in the METF asset under management AUM, giving it an intrinsic value that cannot fall below. All of the assets come from the Mad Meerkat Finance DEX and hence are a part of the DEX traded fund. The DEX traded fund seeks to track high performance assets on the Mad Meerkat ecosystem with strong value accrual strategies that will outline in the set of docs. What's the point of this protocol? Our goal is to build a policy-controlled decentralized ETF system native to the Cronos chain. In the long term, we believe the system can be used to optimize for stability and consistency so that the DTF can function as a global unit of account and medium of exchange currency which represents a basket of goods and investment. In the short term, we intend to optimize the system for growth and wealth creation. We intend to achieve price flatness for a representative basket of goods without using a fiat currency in order to allow the cryptocurrency industry to detach once and for all from the traditional finance world. This sounds fairly interesting as it's backed by a number of tokens on the ecosystem rather than a stablecoin. Makes it backed by actual assets rather than just dollars, which is always good as the tokens themselves can appreciate in value and therefore raise the floor price of the backing price of this token. While this is a good step to decouple themselves from these rebasing DAOs, it doesn't help that they're using the same sort of phrasing within their documentation. But let's carry on reading. So what is an ETF in the traditional finance world? An exchange-traded fund is a type of pooled investment that operates like a mutual fund. Typical ETFs will track a particular index sector, commodity, or other asset. Unlike mutual funds, ETFs can be traded on the stock market, a stock exchange, in the same way regular stocks can. How can we replicate this concept in crypto? Simple, the AUM contains a basket of goods and every METF token you hold represents a share of the AUM. How do I participate in the ETF? There are two main strategies for market participants: staking and minting. Stakers stake their METF tokens in return for more METF tokens, while minters provide LP tokens or MMF tokens in exchange for discounted METF tokens over a fixed vesting period. So who is behind the METF? The team behind the MMF Finance is behind this token. It's all a part of this ecosystem, which has been doing great recently. So it could be a good addition to add this to your portfolio. However, this is not financial advice. Be sure to do your own research and know what you're getting yourself into before you invest. Read this documentation for yourself and make up your own mind whether you'd like to invest. Who runs METF? Currently, most of the decisions are taken by the core team, but we expect to be able to turn this into a DAO governed model as soon as possible. So at the moment, it's governed by the actual devs, but they want to implement the community voting soon, although it's not stated when. How can I benefit from METF? The main benefit for stakers comes from price appreciation and supply growth. The protocol sells METF bonds when there is a healthy premium. The premium that the protocol earns will be distributed to the stakers. Due to the nature of METF tokens are produced, it is in the protocol's best interest to ensure a healthy premium for the METF token. The only way to ensure a healthy premium is for the token to accumulate more assets to raise the intrinsic value of the token. Over time, the protocol will be adjusted with policies to increase METF floor price. This act will reduce the inflation of the total token supply while allowing the protocol to buy back its own tokens, further reinforcing the idea of a rising floor price. The main benefit for bonders comes from price consistency. Bonders can commit capital upfront and are promised a fixed return at a set point in time. That return is given in METF tokens, and thus the bonder's profit will depend on METF price when the minting METF matures. Taking this into consideration, minters benefit from rising or static price of the METF token. This concept is adapted from the popular rebasing DAO protocols. The biggest difference is we do not rebase. Instead, we utilize the bonding system to accumulate valuable ecosystem assets to contribute to our rising floor price. Very interesting. So it does decouple from the rebasing DAOs a little bit, with some features being the same, with some features being different. The bonding system is fairly similar, however the rebasing/staking is slightly different. It actually it recirculates profits made by the protocol rather than minting new tokens. The rebasing DAOs would do, and increasing inflation. There are three main ways to earn from METF protocol: the bonding, staking, and price appreciation. This part will help to explain how each of the features work. Bonding is a slightly more complicated strategy to understand. Essentially, the METF protocol needs to buy assets required for this strategy. It does so by offering bonds. These bonds are sold to users at varying discount rates between 10 and 3%. When users purchase a bond, they need to provide the tokens that the protocol wants. These could include the tokens like MEMF, METF MMF to LP, and MMF SVN. When users buy a bond, the METF token will be issued to the users over a vesting period of 5 days. The discount rate mentioned refers to the additional METF the token users will get. Let's say you manage to snag a 10% discount. That would mean you'd earn 10% more METF tokens than the principal token you put it in. This allows you to lock in a slightly cheaper price at the current time, which has its benefits if you think that the price will appreciate or stay around the same price. Secondly, you have staking. Staking is a slightly more straightforward tool that most DeFi users should understand. This refers to the staking of your METF tokens in the pool that issues out more METF tokens to you. The reason for this is so that METF tokens get to earn interest while awaiting price appreciation for the METF tokens. This, obviously, you have to buy your tokens at market price unless you've already bonded before. You can put it back into staking. Staking allows you to stay more liquid. However, you don't get that discount as mentioned from the bonding if you go straight in from the market price. Lastly, price appreciation. I think all of you guys know how this works. This is the most straightforward. As with all investments, we want the price to appreciate. In this case, we aim for the METF token to appreciate in price due to the multiple protocol reinvestment strategies. For a user, the simple hodl METF and wait while the team does its magic to build the proper DEX for traded fund, such that ecosystem value increases over time. This is all good for everyone, of course, and every project. Lastly, this paragraph here goes over how the ETF plans to keep its floor price rising. Be sure to read over this when you guys are doing your own research for this project. Lastly, let's have a look through the FAQs. So is METF like an ohm fork? No, METF is not an ohm fork. The only similarities you would see would be the user interface as well as the bonding system. The reason that this is so, the team can focus on more important ticket items instead of the UI. These will include items such as the value accrual strategies, onboarding, and other promising projects from ecosystem, all to bolster the price of the METF token. So METF is backed, not pegged. Each METF is backed by one MMF, not pegged to its price. Because the protocol AUM backs every METF with at least one MMF, the protocol would buy back and burn METF when it trades below 1 MMF. This has the effect of pushing METF price back above 1 MMF. METF could always trade above 1 MMF because there is no upper limit imposed to the protocol. Equal to 1, backed can be more than 1, more than or equal to 1. So keep that in mind. That's a nice change from the rebasing DAO. strategy. Let's have a quick look at the website. As you may see, it is very similar to rebasing DAOs, but from their documentation it is slightly different, so it's pretty interesting. Here you can see the amount of AUM in the protocol, which is fairly high. The backing price is currently $81, which is pretty interesting. Total value locked is around 20 million. Here is the staking page. As you can see, 2.112% a day, which is staking and interest rather than the rebasing sort of strategy. And lastly, here you have the bond with the current ROI on the discount. This will change all the time, so when you refresh the page, ROI should change, so keep that in mind and adjust your strategy according to the discount if you plan to bond. As you can see, it changed, so be sure to keep that in mind when you're investing in this project. Lastly, let's have a look at the token price. It's been on a very steady rise since its creation, just under a month ago. However, as of the past 2 or 3 days, it has been very volatile and at a rapid increase. I'm sure there can be tremendous money to be made in these very volatile times. You can see that it's increasing very hard. I, at the moment, will not be jumping into this project, unless maybe I see a good dip for a good price. However, I feel that these DAO sort of protocols have been a bit risky as of lately and not doing too well. Who knows? This one has been, from you can see, has been doing very well. So I might jump in with a slightly small position if there is a good time to jump in. If you guys are interested in this project, be sure to check out all their documentation and their social medias. As always, do your own research and only use this video as a first step. If you guys enjoyed this video, be sure to like, subscribe, and comment down below. Let me know what you guys think, and I'll see you guys in the next video. Bye bye.